Hi everyone, let's go through my preferred bullish and bearish scenarios from macro to micro, including potential trading setups, starting with the macro bearish Elliott Wave scenario on Bitcoin, where this is a 1, 2, 3, 4, 5 wave impulsive structure, followed then by a 3 wave corrective structure to the downside with targets of at least 13k but below. If we then look at this impulse, I don't really like this wave 4 over here because it is so short in time compared to this wave 2. Usually a wave 4 takes more time to form than a wave 2, but as you can clearly see in this scenario, that is not the case as this wave 4 is so short, which is quite rare. If we then look at the corrective structure, this is a WXY that I'm looking at the moment, where usually the minimum target for a wave X is the 0.382 at 29.6k, also in confluence with the support resistance area over here and a weekly order block, for then a potential trading setup where shorts can be laddered in this area, stop loss above, and then trading it to the downside with targets of below 13k. If you then look at the more bullish scenario, this then is a wave 1, 2, 3, 4, 5. So as you can see, the high of wave 3 is now over here, and this looks much better for a potential wave 4 in this 1, 2 scenario. So now wave 4 is indeed longer in time compared to this wave 2, which is something that I like to see. Also, this wave 4 bounced on the 0.5 fib taken from the low of 2 to the high of 3, which is the minimum target for wave 4. The low is also made exactly on the 0.618 fib time, the vertical line that you see over here, the red line taken from the low of 2 to the high of 3 as well for some extra confluence, and we had a big volume peak at the lows as well. Now, volume peaks can signal reversal areas just like it did with wave 2 over here. You can see the big volume peak at the low of wave 2, which was the COVID dump, by the way, but actually it was just a wave 2, right? From an Elliott Wave perspective. But then we had the big move to the upside in a wave 3. So possibly in this particular scenario, this can then be the low as well. Signal a little bit of a high volume low before then a move to the upside in a wave 5. The targets for a wave 5, at least most common target, is between 98k and 174k, which is between the 1.236 and the 1.618 taken from the high of 3 to the low of 4 with the fibs. And then the more rare target is between the all-time high and 98k. The potential trading setups that we had in this scenario are twofold basically. The first one was entering just above the 0.5, expecting this then to be a wave 4. Stop loss below wave 4, or at least below the 0.5 somewhere, because you don't expect high time frame candles to close below the 0.5, as that would kind of invalidate a wave 4. So in this particular scenario, stop loss below, trading it to the upside. And the more safe option, I suppose, is waiting for retracements like we had here, or one that is yet to come possibly, and then ladder the longs in that retracement, stop loss below wave 4 by now, and then eventually trading it to the upside for then the most common target of a wave 5. If you then look at the daily time frame and we zoom into the more corrective structure, this is then the W. We have then an ABC in the red X looking at a 3 wave down for wave Y. If we look at this expanding flat in wave X, we have this A, B, C, where the most common target for wave B has been hit very, very nicely indeed, before then a 5 wave impulsive structure to the upside, which account as a 1, 2, 3, 4, and then eventually 5. 4 bouncing perfectly on the 0.5 as well, which is something I like to see. And currently, price has been ranging for quite a long time in the most common target area for wave 5, the 1.236 and the 1.618 taken from the high of 3 to the low of 4, of course, again. And then, yeah, wave 5 might already be in, as I will show you on the medium time frame count that I have as well. For me, the wave 5 is very likely to be this high over here, that wick, but I'll show you in more detail in a medium time frame count. What you do see over here is that price has been ranging in the most common wave C target area, as well as at the same time the most common wave 5 target area. So that is some nice Elliott Wave confluence there as well. Also, the 0.382 is very close for the wave X over here at 29.6k, but we didn't yet hit 29.6k. Also, the 1.618 is also at 29.6k, by the way. So these fibs are basically at exactly the same level. That makes it quite interesting. I mean, by all means, the 30k level is quite interesting, and we still have a little bit of confluence around 30k as well. So seeing a little bit more upside is okay, but in my opinion, that won't happen in a potential wave 5, but then in a corrective structure to the downside. Of course, we again have the support resistance area over here, providing us then in total with a potential short setup of laddering the shorts in this area over here, stop loss above, trading it then to the downside. If we look at the more bullish scenario, then the corrective structure from the all-time high is a 3-wave structure followed by 3 waves, which then is a WXYXZ. Wave X here just missed out on hitting the 0.382. I mean, it can happen, of course, in trading on the charts. Not everything is 100% from an Elliott Wave perspective, but you don't see this too often. And Wave Z hit the rare target for Wave Z, which is the 0.618. However, in this scenario, that can be perfectly fine, as we know from the macro time frame that we have the 0.5 fib over here, and we don't want to see high time frame candles close below the 0.5 fib in the potential bullish scenario. If you then look at this impulse structure over here, then I have the yellow wave 1 ending right about here, so that is just at this support resistance area flip again, because I do see people sometimes have wave 1 over here, wave 2 over here, but what I don't like about this is that this wave 2 is so short in time. Usually a wave 2 is about 38% of the time it took to form wave 1, but in this scenario, wave 2 is only 23% of the time it took to form wave 1, which is very, very rare. So yeah, not something I like. I prefer wave 1 to have to be over here, right about the 30K area, because there's some nice confluences over here before then a corrective structure to the downside, where the potential short setup has been, of course, lettering again inside this area, stop loss above, trading it down. Most common targets for a wave 2 is between the 0.5 and the 0.786, which is basically between 21.1k and 17.7k. Make sure this is log scale, and also all the fibs that you see if I'm on log scale are also ticked this box, fib levels based on log scale as well. So the fibs are on log as well, so in case you want to copy this. So then the potential trading setup, well, these are the most common fibs, yes, but by far the most common one is the golden pocket, and the golden pocket also has nice confluence with this low of wave 4 for maybe a little bit of a liquidity grab before then a move to the upside, where the macro targets around 100k, 174k is going to be the main target. Stop loss then below this wave Z, as that is also the low of wave 4, and then trading it to the upside. If we then go to the medium time frame scenario, I'll show you more about this final leg to the upside and basically what I'm looking for as well. So in this particular scenario, this is then wave 4. This is the autonomy of basically the wave 5, where we had an expanded wave 1. So an extended wave 1, then a wave 2, 3, 4, 5. And because wave 1 is extended, the targets for 2, 3, 4, and 5 change. However, all of these are exactly as they should be, which I can show with a discount shortly as well. I won't go through it, but as you can see, these are the most common target areas for the different waves, for wave 2, wave 4, and wave 5, and wave 3 does not have a target if wave 1 is extended. And you can see that in wave 2, in wave 4, and also in wave 5, all the targets have been nicely respected. So if you then go through the more corrective structure after most likely this wave 5 is in, I am still looking for about 30k. So we do have the weekly naked point of control and the weekly around 30k as well. Besides, it's a psychological level, which I think is going to be quite interesting. And what you see on the chart right now is a bars pattern. So this is a piece of price history that I copied on the current price action using the bars pattern, which is, you can find it above the icons over here, then go to the bottom and or middle, and then we have bars pattern, and then you can copy a piece of the chart and then move it around. So what I'm basically looking for is this to be a 3-wave in an A, then a B to the upside, and then a C. So this is then creating an expanding flat as a first corrective structure before then whatever happens and another move to the downside. So if I, as you can see, copy this exactly on the price action that we have, I've been looking for this to be wave A, B, C, WXY, but these lows over here not taking this low. So instead moving to the upside in then 3 waves as well to reach the most common target area for wave B, which is in between the 1.236 and the 1.38, which is between 29.6k and basically 30k, giving us also the potential short setup that you see over here of lettering the short in this area, stop loss above, trading it to the downside. The rare target for an expanded flat wave B is the 1.618 at 30.5k, so the stop loss should somewhere be above that level for sure. Of course, guys, this is educational. This is trading based on Elliott Waves potentially, and of course it's educational. We are on YouTube. So then trading it to the downside, where the length of this trade, well, it can really, or this potential trade, of course, can really differ, because if this is a 1-2 scenario, like 1-2-1-2, like a 1-2-1-2 as mentioned, I don't really like this to be a wave 2, but hey, let's just say this is a wave 2. If it is a 1-2-1-2, then the main targets you'd be looking for are these fibs over here, the 0.5 to the 0.786, which is between 23.9k and 21.3k. So then the potential short scenario would end somewhere here. However, with the other scenario that I showed you, the bullish one, where this is a wave 1, 2, 3, the targets are going to be a bit deeper, so the short can be probably extended. The golden pocket area was right around this low, right? So that is the most common one. However, if this is the potential bearish scenario, where this is the high of a wave X, and we could potentially go all the way down, of course, this is going to be a very big potential swing trade. So yeah, it's quite an interesting level. We got to wait and see how price is going to move to the upside, but this is definitely something I'm looking for, hitting that 30k area before then moving to the downside. If we then look at the low time frame scenarios, actually got 3 to show you, but one is very short that I like to show you. So the first one, which has been my preferred one so far still, until invalidated of course, is that this is the high of wave 5. Then we have a WXY 3-wave structure, wave Y bouncing perfectly in the most common target area for wave Y, which then finishes wave A. So this is a 3-wave A looking for a 3-wave B before then eventually a C to the downside. In this particular scenario, we had this potential long setup, educational, based on Elliott Waves, of course, on the Bitcoin chart, where the longs are laddered inside the target box stop loss below here, trading it up for wave B. Very nice. Eventually, stop loss break even, of course, based on just logical trading, just in case price comes down. And then we'll see if we reach this target area or not. Potentially, a take profit 1 has been taken. But yeah, it's nice. It's break even. It's good. Then eventually, the move over here is a 3-wave structure in a W. Then this is not the easiest structure to count. So over here, and that's the thing, you can count 5 waves as well. The ending diagonal, however, is not very clean, as I'll explain on the micro or in another count actually. But this then being a W, that works. WXY inside, so a WXY inside of here. Then if this is an ABC, this C is very, very long from a Fibonacci Elliott Wave perspective, because if this is an A, B, and this is C, then C is 2.618 times longer than wave A, which makes it more likely this is a wave 3 and very rare for wave C. However, in this scenario, we do have then a 3-wave in an X, or this wave X is having another low. Now this type of stuff is very, very difficult to count. Like the horizontal stuff, you really have to go to either lower time frames like 5 or 3 minutes to sometimes figure out the little waves in between the bigger waves. So yeah, that's something I don't really enjoy doing. I like the minimum I often go is the 15-minute time frame, which I'll show you on the micro as well. But in this scenario, basically what we are looking for, which I believe is most important, is upside. So we have wave B, the most common target for wave B over here between 29.6 and 30k. And as I mentioned in many previous videos as well, we had a double top over here, we have a triple top over here, and those are like magnets for liquidity. So I expect at least then either or, but at least a double top to be taken. And well, we definitely took it. We actually wicked on the 1 hour, we wicked above it, then had 1 hour of ranging below the double top before then eventually passing through. So we still have the triple top higher up at about 28.8k. We gotta wait and see what price is gonna do, if it goes this high or not. But again, like usually those type of scenarios where you have double tops and triple tops are like magnets for price, because there's a lot of liquidity resting above these areas, right? There's a lot of liquidity, like stop losses from people and whatnot. So, and also people might be buying, like they think, hey, we change market structure or we go above these highs, so people will buy, like the breakout buyers, you know, and that can fill short positions as well. So yeah, we have to wait and see, but we still expect in this scenario wave B to be hit, and then moving now to the upside where eventually the triple top should be taken as well. The more bearish scenario, but eventually still bullish, is this being a WXY XZ. Now this Z is already taking a very long time, as you can see, compared to W and Y. Now Y was a little bit longer than W, so hey, wave Z being a little bit longer than Y, sure, possible, but of course you don't want to see it take too long, because then the time between the waves is not matching, which is something I don't really like to see. So if this is then wave Z, we're looking for this to be a 3-wave structure to the downside, where the most common target of this wave Z is between 27.3k and 26.9k, which also happens to have confluence with this target box that I have over here. Now we just missed out on actually hitting this target box with wave Y, as you can see, which is usually something I don't really like to see. So yeah, nonetheless, we did miss out on hitting the target box, but as you can see, wave Z, the target for wave Z, is exactly in confluence with the target box as well. And if we then count this as a WXY, actually I think I might have to change the targets. It's very early morning currently. It's earlier than 7 a.m, so I didn't actually have too much time to adjust my chart. So let me actually quickly change the fibs and see where we end up. Of course, I'm trying to do my analysis before the video, but I actually forgot. Oops, that is the wrong button. I actually forgot about it. So now the target area for wave Z, the most common target area for wave Z is still the white box over here. But the most common target area for this then being a WXY is in between these fibs over here. So the other one and the 1.236, which is between 27.5 and 27.2. So still in confluence with the target box, a rare target for wave Ys, the 1.618. And if we make these fibs a zigzag target, so basically saying this is a 5-wave structure, this is somehow a 3-wave structure, and then a 5 to the downside, then again the most common target are these fibs over here. So still a little bit of confluence with the target area for wave Z, for then a potential long scenario, stop loss below these lows, moving to the upside for 30k. Also, because below these lows there is not much support holding price, in my opinion. I think that if we go below there, we could go below or we could move to the downside relatively quickly, where the next target box is all the way down here at 24,850. So that's quite a drop, let's say. If we then look at another bearish scenario, I actually want to shout out John in the Discord group as well. He's a great trader, full-time trader himself. And this is a scenario that I had as an alternative for a very long time. You will find it in some older videos that I have shown, where I have been talking about this wave 1 that isn't the cleanest, and also this wave 5 now isn't the cleanest. But basically what we're looking for is this being a 1-2 and then another 1-2 before then a bigger 3 to the downside. So this is actually a real bearish scenario, right, where we don't expect upside anymore but downside. And if I take the screenshot of John from Discord that he shared with his allowance, I'm allowed to show you guys as well, then this is what he has counted. So to run you through for a little bit, this is exactly, so the high we see on the left is this high over here. It's the high of wave 5, right? And if we then move to the right side with what we got, of course we have more price action at the moment because price did move up. But in this scenario, this is then an impulsive structure, a diagonal to the downside from the beginning of the high of wave 5. So 5 will move down over here for then a bigger wave 1. Then he has a WXY in a wave 2. That is a little bit more rare, but you can't really count it any other way because usually wave 2s have zigzags. But a zigzag is a 5-3-5 pattern. But as you can clearly see, price took the low of this wave 1 over here, and that is not allowed in a 5-3-5 zigzag pattern. So this has to be something different. It's then either an ABC 3-3-5 or it is a WXY. But as this is a clear 3-wave structure, this has to be then a WXY, which is more of a ranging scenario. Then from there, wave 2 finish, so we have a bigger 1-2, and then from the end of this wave 2 he has the blue count over here in a 1 2 3 4 5, which then is again a yellow 1, right? So hopefully not too confusing. So this structure down here is a 1, then we have a WXY in 2 before a move to the downside in 3. Now the triangle didn't really work out as drawn over here, but we did find a move to the upside. And the main reason is that if this is W, then we have A, B, C. But in this scenario, the C actually was the low, and now we moved up. So D and E were never really there. As you can see, this was then the wave C, and then we have D, E, and then a move to the upside. But we already moved to the upside quicker, of course, because yeah, we already pushed to the upside by now. But nonetheless, the idea of John indeed for finding more upside in this scenario is very, very correct. And as I mentioned, counting these horizontal structures is very, very difficult. Usually something I don't really tend to do, but John is definitely a lower time frame type of trader. Usually goes also to the 1 minute or the 5 minutes. which he enjoys. So yeah, more upside before then downside. So this is then a 1-2-1-2 scenario for then eventually a lot more downside to come. Now what I based on it, like looking at this scenario, there's two things that for me make it an alternative scenario, and I spoke with John about it yesterday as well in the group, where this is a leading diagonal then, right? However, this wave 3 is longer by a few dollars than this wave 1, and in a leading diagonal, contracting diagonal, you don't really want to see wave 3 being longer than 1. It should be shorter, that's the rule, but it's actually a little bit longer, so that's not the nicest. And because this is a little bit longer than wave 1, it kind of becomes an expanding triangle with, or a expanding diagonal, which is very rare. So yeah, wave 1 is not the cleanest, and actually the same problem appears on the lower time frame with this potential end of the impulse in this wave 5. So we then have a 1, 2, 3, 4, 5, right? And then this is again a diagonal in this wave 5 over here. But then we have this wave 5 being longer than this wave 3 by just a few dollars as well. So it's not the cleanest. It's not the cleanest, but that is not to say that it is not possible, of course, because still those are maybe expanding wise rare. Like an expanding diagonal is quite rare, but yeah, it's still possible. And also we just crossed the targets by a few dollars, you know, like what's going to be the range of acceptance, you know what I mean? Yeah, so in this scenario we do still count this then as a 1-2-1-2. I do usually like to see, if it is a 1-2-1-2, I usually like to see the second wave 1. So I like to see this 1, 2, and then a 1, 2. So I like this wave 1 to take the low of this wave 1. That is usually something that I am looking for, and also quite common. But in this scenario, that didn't happen. So for those three reasons, basically, it's an alternative that I always had somewhere in the graveyard of my counts. But thanks to John and actually speaking to him yesterday and sharing his count as well, I was like, you know what, mate, I'm going to show this in the video because I actually think it is very relevant. Because yeah, this is definitely the bearish scenario where we don't find more upside, and downside is going to be what we are looking for. So that being said, let's go to the micro time frames. And on the micro, then we are looking for this to be the bullish scenario. So we have the low of wave Y over here, then we have a W, somehow again something of an X, and then eventually looking for upside in a wave Y. Now the potential short setup already played out, targets hit, bearish divergences, very nice, and then eventually target was this box. The long setup that we had was, or the potential long setup, because guys, it is educational, please, we have the potential longs lettering over here, stop loss below, trading it to the upside, where we've been moving up then the stop loss time and time again when price was over here, moving the stop loss down here. So if this is a 1% risk, this was like a 0.2, then eventually below here, then eventually when price was here, stop loss below these lows for then, I don't know, almost like a break even. We didn't reach these lows, and then price is at least for a bit moving to the upside. So yeah, by now this is of course break even. So either it's going to be a nice winner or it's going to break even. That's absolutely perfect. But in this scenario, we do expect then more upside to happen in a WXY, taking the triple top at least. And if we go to the divergences and stuff that is happening on the lower time frames, the bullish divergences locally here, they already played out. But if we zoom out a little bit, the ones on the higher time frame, not yet. So if we look at this low and these lows, we have higher lows, well, we have lower lows on the CVD, which is a bullish divergence with the main target being the high over here. So this is then the target for the divergences between these lows, or this low over here and these lows over here. So this is the main target, which then again also is the triple top for extra liquidity. If we then look more locally, what can we see? So if we go to, let's go to the 5 minutes, and we can see bullish and bearish actually, but the bearish already played out. So if we look at this structure over here on the right side, you can see we made lower highs, but a higher high on the CVD, creating a movement to the downside. But this already played out because we took the low in between the divergences. So that has been playing out. We do have some bullish divergences that didn't yet play out between these lows over here and then price over here. So if you can see, we have a higher low, but we made a lower low on the CVD with this low over here. and the target would then be taking the high again. But of course that hasn't happened as we have been moving to the downside. Now, if price is gonna with every bounce create bearish divergences, obviously the bullish divergences don't matter, right? But we still, at least for now, have these bullish divergences, and the moment we take these lows over here, the bullish divergences are also invalidated. And if we then go to my final scenario, this video is a bit long, but and also it's going to be after 7 online for sure, which is usually the time I upload, so I'm sorry for that, guys, but it's early. Then yeah, this is again the low of wave Y. We're looking for a 3 wave to the upside. But then this is a 3 wave A, 3 waves in B before then the C to the upside, creating an expanding flat in wave B towards the 30K area, where this wave B is already taking a long time. And then the question is, yeah, it can both be like a 5-3-5 structure, so an impulsive move to the downside, or this is a 3 wave structure in a W followed by a 3 wave in X and then eventually a 3 wave in Y. Now, if this becomes a 5 wave structure to the downside, please keep in mind that this can also be an impulsive structure 1-2-1-2 to the downside. However, it can also be this being a wave B. So it all depends on how quickly it will happen, because in a wave 3, you expect volume to increase compared to this structure over here. So if we quickly click the volume, so we have this structure over here, quite some volume actually, but then in this scenario you expect, if this is a wave 3, you definitely expect volume to increase. But if volume is actually quite low and decreasing, it's more likely it's a wave C in a 5 wave structure. Then the potential long setup is going to be entering the longs here, stop loss below, trading it to the upside. So I hope this video was helpful or valuable to you. I like to thank you for watching and subscribing, and I will see you at the next one. Bye bye.